Welcome to another episode of Bitcoin Magazine Live. I'm your host, Q, coming to you from Nashville at Bitcoin Park. P, my co-host, how are you doing today, sir?
I am doing fantastic, as always. Got my mic switched up. Normally it comes in from the top. Now it's coming up from the bottom. We'll see how it goes today. Tell me what you think in the comments. Let's dive into it. What do we got today?
To be quite honest, man, I'm surprised you had the audacity to lie, not only to our audience, but more importantly to me, because there's not a chance in hell that you're doing fantastic. We have a light. This is going to be Bitcoin Magazine Live Light Edition today. We unfortunately got rug pulled. We do not have a guest planned in about 30 minutes. So we're going to do news and notes in just a moment. And at 2 p.m. Central, 3 p.m. Eastern time, I believe. Yeah,
correct.
3 p.m. Eastern time, noon Pacific, 2 p.m. Central time. I don't know what time it is in Europe, but at that time we will be joined by Dylan LeClaire, Checkmate, and a few other special guests over on Twitter Spaces to break down the impending merge.
It's going to be amazing. When we say the merge, of course, we mean the Ethereum merge, which is this ongoing developing story. We've talked about it a lot, but it's really fascinating to see the Ethereum community come to the realization that the Ethereum protocol is not actually decentralized in the way that most people think. Bitcoin Magazine Pro, Dylan LeClaire, Sam Roll, the team over there have done a really, really nuanced analysis of what's going on there. So we're really excited for that later. So you'll definitely want to check that out.
I will also just throw this out there because I see all of you, the support in the chat. To be honest, like we could also treat this like a AMA episode, and you could ask P, myself, and Chris when he decides to show his face. Anything in the chat is fair game.
Oh, I fucking love that.
Bitcoin. It could be about P's mustache. It could be about pot. I don't give a fuck. It's Bitcoin Magazine Live Light Edition today for all you fools.
I disagree. I think it's Bitcoin Magazine Live Heavy Edition. We're going hard. We're fully engorged. Let's do it.
Ask us anything in the chats. We are going to stay up to date with any questions you throw out there, but let's dive into some news and notes now. We mentioned just a few days ago that, the U.S. removed itself from the gold standard back on August 15th, 1971, about 51 years ago. I was not born yet. Chris was not born yet. P was in his cryogenic frozen chamber awaiting his next appearance to civilization. But surprisingly, or perhaps unsurprisingly, it is estimated that 30% of Americans still believe the dollar is fully backed by gold, but it gets worse, my friends. Not only do 30% of Americans believe that the dollar is backed by gold, 50% also believe that the banks are 100% fully reserved, as in they don't use fractional reserve banking or don't have 0% of what they're supposed to have as of 2020 when Jerome Powell said banks don't need to hold any cash anymore. Guys, come on now. Like, I get it. I get math is hard. I get money can be intimidating, but don't be naive. We are not on the gold standard, nor have we been for over 51 years. The banks do not have 100% fully reserved statuses. They do not hold enough cash on hand. If there was a bank run here in America, they would not have enough money to give everyone what they claim to have held in their bank accounts. Be careful, be cautious, buy Bitcoin. Also, this is not financial advice.
It's always financial advice. Okay.
Before we go though, are you guys surprised that these are not insignificant? 50% of the population thinks that banks not even having fractional reserve currency, but they believe there's full backing of all the money that they have deposited in the banks, let alone about a third of Americans believe that we're still on the gold standard.
Yeah, I mean, it is nothing short of a tragedy, in my opinion. We are not taught in school how financial systems work. We're not taught how to effectively, even separate from Bitcoin, no one is taught how debt works, what the various financial instruments are, how our economy works. We're taught that kind of in abstract, but there's not very much practical information that is conveyed to people that are going through educational systems in this country. More than that, there is even less for adults. It's just not a part of what is expected of people to understand what's actually going on. And it's super sad because money is, I hate to sound so trite, but it's what makes the world go around, right? Being able to transact in value is an absolutely critical function of the world today. So these stats actually do surprise me. I'm shocked that 30% of Americans still think we're on the gold standard. And I'm also super sad that 50% believe that banks are fully, 100% fully reserved, when of course it is 0%. Banks are able to create money as of right now. When you take a loan out from a bank, that money does not exist. It didn't exist. It has no backing. And the bank just creates that money out of thin air digitally. People need to understand that.
Yeah, I think it's by design. What was Henry Ford's quote? If everyone knew how the banking actually worked in the United States, there'd be a riot by the morning. I think that's true. I mean, it's by design that they don't teach you how this works. And I think, I don't want to say the incentives don't matter, but people just care about their day to day. They care about going to work, working hard, getting paid, and being able to provide for their family, maybe go on a vacation once or twice a year. But that's, I'd say, the majority of people in the United States, and I'd say even broadly. But yeah, that seems to be the way that it is, and I think it's by design. We have a question in the chat for Q. Q, I'll pop it up. What would be your solution to sound money if Bitcoin never existed?
This is tough. I really like this question though. I'd have to break down the properties of money. So it needs to be easily accepted. It has to be hard to make as well. So I would actually go take a shovel and pick and start digging and finding the rarest of precious metals, but I'm not talking gold. I'm talking a whole new metal. That's what I would find. If I had to create it, I had to create it. So be it. But it would be so difficult to create. It couldn't be copied. It would be easy to transfer over from myself to anyone else.
You're basically just reinventing Bitcoin. It'd be digital, but also physical.
No. Bitcoin doesn't exist. So therefore, you know what? I'll even curtail or curate my answer for the Rumble crowd that maybe always likes to throw out the most ridiculous thought of, well, what happens when the internet gets shut down? But Bitcoin won't work without the internet. Your banks won't work without the internet. Your ATM won't work without the internet. So in this Mad Max civilization where we have accepted the internet doesn't exist anymore, so Bitcoin has failed and fiat has failed for whatever reason. In this universe, I take my shovel and I pick and I go deep into the desert and I dig until I find something that I've never seen before. And then, my friends, that's when salesmanship comes in.
Wait, keep it going. Okay, so we're digging until we don't find anything. I've already got the skulls of my enemies draped across my chest because we're in full Mad Max world at this point. There's smoke, there's lightning, there's tornadoes coming in, destroying everything, and you're out there with this pickaxe made of human bone because that's the only material Q has available to him. He's digging, he finds a rock. He's never seen it before. He does not know that this is just the most common rock on the planet, and he's like, this is now the money of our people. Is that a fair characterization?
I like that. Honestly, I'd even accept human bones as the new form of sound money. It would be really difficult to just manufacture human bones from scratch.
Actually, I've got some bad news for you. There's a lot of people, and they're all filled with bones, Q. Every single one of them.
No.
He's like, we resort to murder.
Oh, sweet Jesus.
But to seriously answer your question, it would have to be something scarce and difficult to create and make. Those, to me, are the two most important properties when we specifically talk about sound money. If you just want to print money, if you just want to recreate fiat, you could theoretically do that. All you genuinely need is one other person to accept this as a form of payment, and you've essentially created a form of money. So obtaining something that is scarce, and the thing that Bitcoin has accomplished that nothing else has, is absolute digital scarcity. I am no computer tech, as many people learned last night by my stupidities. But I do think that in the physical realm, there are ways to not find absolute scarcity, but to find and manufacture scarcity. Ultimately, I don't believe money should be controlled by any individuals. So if it had to be something else, it has to, in my opinion, genuinely come from the earth. If it can be something created, people just create more of it for themselves, as history has proven to us.
We're going to pull sound bites of every single part of that and just mash together into a song. We're going to auto tune it. It's going to be great. All right, my friends, please keep the questions coming.
Ask us anything today.
We got a lot of ground. We got a lot of ground to cover. Moving on. The World Bank's IFC has apparently not been paying attention for the last 10 years in the space and has decided to try to use blockchain for carbon offset credits. IFC stands for the International Finance Corp, which straight up just sounds like some Orwellian bullshit. That's like, corporation. It's just bad news. The name alone, you can already tell it's going to be a fucking disaster. They are backing a blockchain-enabled platform, as I said, to trade carbon offsets, aiming to attract more support from institutional investors for climate-friendly projects in emerging markets. They are betting that blockchain, which they define as a digital database with information that can be publicly shared within a large decentralized network, will boost the use of carbon offsets to a greater extent than more traditional methods. And this is just frankly embarrassing for everyone involved. I feel stupider having read this article. You don't have to because we're talking about it here. But there was a period in the previous bull run where everything and anyone wanted to get their shit on quote unquote blockchain. Long Island Iced Tea changed their name to, I think it was the Long Island Blockchain Corporation. They were not doing anything. Kodak was like, we're mining Bitcoin. We're making a new miner. They weren't doing that. It was all bullshit. It's interesting to me that this is happening in a bear market because normally this is the type of, or in the past at least, this is the type of behavior that we saw during bull markets. And I think that is a very, very, it's just an interesting indicator because it shows us that the milieu is changing. Even when we are in a bear market, Bitcoin is undeniable. We've reached a threshold at which no one is claiming like Bitcoin is bullshit. Companies are still announcing support for Bitcoin. So I'd say that's the optimistic take here. But yeah, I mean, this is just a rehash of DentaCoin. If you don't know what that is, there was a whole thing where people were like, we're going to put dentists on the blockchain. And of course, it was absolute horseshit. Blockchains are very, very good at decentralizing information and operating in a trustless or a trust minimized environment. They can be more robust than other systems, but they are incredibly slow compared to traditional database systems because they intentionally are trying to optimize for different trade-offs. So 99% of the time when you hear somebody like, we're going to put XYZ on the blockchain, they're doing it just because they want the PR pump from it. And it's a terrible idea. And almost everything should just be in a fucking SQL database. We've spent decades perfecting how databases work. There are certain systems where a centralized database is actually the answer. And something stupid like fucking carbon offset credits is definitely going to be that thing.
Anything to add, Q?
I'm in negotiations with a potential guest.
All right. Sounds good. All right, moving on. We have, so I hate to keep bringing up the Ethereum community, but obviously there's a lot going on with Tornado Cash and everything that's going on. With the move from proof of work to proof of stake, that will not result in lower gas fees, is apparently what some of the developers are saying. Obviously, a lot of people were saying, oh, the gas fees are very high, but when we transition from proof to work to proof of stake, they will reduce because obviously we don't have miners mining our blocks. We just have validators who have the majority stake validating what transactions go through and what transactions get denied. Obviously, when you're doing this, has a huge centralizing effect. Obviously, the largest exchanges, Coinbase, Binance, as well as the Ethereum Foundation, would have control of the network, and they can pivot and change the network however they see fit, really. But a lot of people are expecting like, oh, this comes out with a benefit of that it's going to be cheaper and freer to transact on this. That's not the case. So not only are they screwing the miners out of money or revenue because they're no longer there, they are keeping those proceeds from themselves while controlling the network. So I just kind of think that this is very, very funny. P, Q, any of your thoughts to what they're doing over there?
I mean, everything they do is stupid. I'm fully like, I want to remind everyone this, okay? The merge date had already been pushed back numerous times, but was supposed to have happened on Monday. Let's not forget that. And I'm spacing on who, but someone throw it in the chat. There's someone that literally commented and has the screenshot of the news article citing August 15th as the date of the merge, promising to eat their own dick if the merge actually happened in August. Well, let me tell you, we are 14 days away from the final day of August, and I'd be willing to put money that that young man is not going to be eating his dick, given the fact that they have already said the merge is going to happen in September.
Wait,
But-
sorry. Somebody said that they would eat their own dick if it didn't happen, or if
No,
it
if
did.
it did. If it happened by August, they would eat their own dick. Great bet.
Interesting.
Great
Interesting.
bet.
I made a similar one, but not nearly as extreme. Mine was I will eat some shoe leather. Not an entire shoe. I'm not an insane person, only slightly. So I will eat some shoe leather if the merge happens as planned and is successful.
Yeah, I think we got a great question that actually just came up. So they were asking, hey guys, what are your thoughts on Wasabi Wallet moving a few months ago after what happened with Tornado? Seems like a smart move by them now. I guess you're referring to them linking with a chain analysis company. So Wasabi, for those that don't know, Wasabi Wallet is a CoinJoin coordinator that allows people to mix or collaboratively spend their Bitcoin with a group of people to increase the I always mess up this word. Increase the privacy of their UTXOs or Bitcoin transactions. What that basically means is it's a CoinJoin coordinator, and yeah. So
Just keep talking.
Yeah, my bad. So it is a CoinJoin coordinator that they have now partnered with a chain analysis company for, as you pay fees to get into the coordinator or basically do this transaction, it is going to help chain surveil people. Obviously, it had a really bad rap in the community a few months ago when this happened, because while you're saying you're trying to help people with their privacy, you're still trying to track people. It is a centralized coordinator. So while you're running this, they do know, I guess, the inputs coming in, but they don't know the outputs coming out. P, I don't know if you want to clarify anything I said there.
No, I mean, I think chain analysis companies are the devil. I to be honest, I haven't been following that specific aspect of the Wasabi saga super closely, so I can't comment on it too deeply. But these systems are, that is to say, chain analysis systems are designed to literally break or erode one of the main ideas behind Bitcoin, which is this: it's not anonymous, it's pseudo-anonymous. And I just think they're absolutely the worst thing ever. And it makes me really sad that to hear that an organization is partnering with them that is ostensibly and clearly designed to ideally support privacy.
Yep.
My only comments, and this is not, I unfortunately have far less technical understanding, and I greatly rely on my two colleagues here and many others. And I urge you, if you are like me and not the most technically savvy, to really seek out multiple opinions and perspectives. The one thing I will say is everything we are seeing from the regulatory aspect happening to Ethereum, we would be naive to think it's not going to be there is not going to be a similar type of attack directed at Bitcoin at some point in the future. So that is all I will say to that, because I am so out of my element on this conversation and topic.
So Chris, I actually want to go into a little bit more. Can you elaborate on what this collaboration was? Because I hadn't been tracking on that. Is the claim that they are intentionally collaborating specifically with a specific chain analysis company?
Yeah, so when they were changing for Wasabi 2.0, the way that they worded it is they're doing it ahead of any regulation and they're not being pressured to do it. So what they're doing is they have started, obviously, Wasabi 2.0 versus Wasabi 1.0 was a coordinator that it worked, but it was a little bit wonkier. So this was cleaning up the UX and the user experience for it. In doing so, they said that any of the fees that they bring in, so basically to get into a CoinJoin implementation, it's like a Bitcoin transaction. There's a fee, or even like the Lightning Network, there's a small fee to get in. Once you get in, you can CoinJoin your fees and you can go into multiple rounds. With doing that, every time someone enters in, a portion of the fee, aside from going to Wasabi and their developers, is going to a chain analysis firm to track transactions, meaning that they are paying, in theory, they're paying a chain analysis firm to track transactions. Obviously, there was a lot of hearsay, she-say of like, well, if I'm doing this, are you just transacting, like, you tracking my transactions? So they can see as a transaction comes in, but they claim Wasabi's different than Samurai. So Samurai has 5 inputs, 5 outputs. Wasabi, I'm not really sure the under the hood, but I know that when it goes in, let's just say, perfect example, I saw one online. It was there could be 241 inputs going in, and then coming out, there's 257 coming out. So obviously it adds some anonymity with it being so many transactions in and out. And obviously they're splitting. Some people are getting 2 different UTXO so they hold the wallet to 2 different addresses. But like, let's just say it's a perfect example. Let's use 1 Bitcoin. Let's just say they send me 0.4 Bitcoin and 0.6 Bitcoin, but I send 1 Bitcoin in, and then they mix it and they send it out, and it's 2 different addresses. So even if you knew that I had the 1 Bitcoin there, even though I have across a wallet 0.4 and 0.6 equals a whole Bitcoin, or obviously without the fees, less the fees, no one would be able to track that I own that now 0.4, 0.6 myself as the addresses come out, or at least that's my understanding of it.
All right, I'm gonna have to dig into that more myself. I need to read up. It's crazy.
And Hammer saw, actually, bearing up one last great point before Q goes. They're also requiring OFAC compliant mixing. So if you have a blacklisted Bitcoin address as you go in, they could blacklist you from, I'm not sure but basically if you go into the coordinator, I guess they could confiscate your Bitcoin because you're technically sending it to them in the process, or they blacklist it that they note it like, hey, this address is coming in. We're not going to allow to start the mixing process.
That I had heard, which is hilarious to me.
So technically, if you coin joined before and that gets dinged in a black, like as included in the blacklist, like let's say you use Wasabi or Samurai and then you go to Wasabi, they could technically ding that. Obviously, they would need to know the address that came out of the Samurai coordinator, but it'd be very interesting if like a couple months, if Wasabi's like, obviously they're butt heads and they always say which one of their implementations is better, which is, in my theory, making privacy practices and coin joining tools stronger. But in theory, they could just start looking at all the Samurai coin joins, and any address that comes out of there, if you try to like mix in 2 different mixers, they could say any address that comes out of here, we're blacklisting automatically. They don't do that right now, but that is a very real possibility that they could implement.
So someone just posted in the comments that Max Hillebrand, CEO of Wasabi, was interviewed recently, and he claimed that it only affects their coordinator. So they acknowledge that they do chain analysis on the inputs with apparently hyperconservative Wasabi selected settings. That's still, I think the idea of being an OFAC compliant tool that is trying to improve privacy is a little bit, it just doesn't make sense to me. But to be continued. We'll dig into it more.
Q, do you have anything else to add, or do you want to go on to the next story?
I found, I don't know how to pick, I think it's anime, the question that they had posed. And I think I'm going to paraphrase it. I think I am understanding it. So what they literally have written is domains on BTC. All the current functionality for what I'm thinking exists. Basically sign a message with the IP, port, domain name, and any other details using a PK that unlocks one of your UTXO. That, to me, the way I'm interpreting that is like that would just be building whatever application that we currently interact with on the internet today on Bitcoin layers 3 or above. In essence, almost like creating, let me make a much simpler example that already does exist, like the Jack Mallers internet or email system that he had created, where it costs 1 sat to send an email, and it's built on top of the Lightning Network. I believe, throw it back in the chat if that's kind of what I described is what you're looking for. Personally, I think that's an inevitability of where we're going as Bitcoin becomes more and more used in different industries and different sectors, especially those that rely so heavily on the digital sphere and digital space. We've heard Michael Saylor and countless others talk about the orange check mark for for Twitter to hopefully like get rid of spam bots. This mailing listserv idea, or building an email list, an email provider on top of the Lightning Network, again, so that you have to pay sats, even if it's just 1 sat to now send an email. it disincentivizes the spam bots. I truly hope. Okay, yeah, that's sort of what I'm thinking. What are your guys' thoughts on the further development of things like this? Is this an inevitability, like I'm saying, or do you think that this is actually a little too far-fetched?
I think that what I'll say is there are certain people who would argue there's different ways of looking at this. You could be talking about trying to do things on chain in a way that would create more transactions in the Bitcoin network. And some people would argue that we don't want to accidentally conflate the movement of sound money with some of these other systems. Now, I don't actually have a strong view one way or the other. What I will say is that there are tools that are doing this not on layer 1, but instead trying to do something like this on layer 2. So Impervious.ai is a really interesting company. There are creating APIs and systems to allow people to build things on top of the Lightning Network. And I think that's probably the direction that holds the most promise. They've had a bunch of really interesting hackathons. They were at Bitcoin 2022. I know that they have sort of like I think it's a prototype at this point. It might still be in beta, but sort of a VPN system where in order to sort of, for lack of a better term, coordinate the initial connection, that's over the Lightning Network. So there is a lot of really cool stuff that one can do on top of layer 2, certainly. I think that, and then the reason for that, as Jack Mallers so eloquently puts it, is that Bitcoin represents an incredibly, incredibly robust and decentralized system that already exists. And so you can leverage those systems. You can leverage things like the Lightning Network to create more effective versions of systems that already exist, systems that are more censorship resistant, systems that are more decentralized. And I think that is a very, very interesting area of work that's being done by a lot of different people in this space. So super excited to see things being built on top of the Lightning Network. Tools like Taro, which is by Lightning Labs, are going to open the door for a lot of other areas of exploration there. But yeah, I can't wait to see what people build.
Yeah, I agree. And also, Q, I know you said it was 1 sat for Jack Mallers. I think it was either 50 cents or $1 to send an email for him on the platform, just to clarify.
That's fucking expensive, bro.
Yeah, but
you're emailing a CEO and he's giving you your time and attention.
All right.
Let's hit the next story. And guys, for everyone who's coming in, throw any question you have in the chat. We're doing an Ask Us Anything. So anything is fair game. I've been smoking a lot of hybrids. My favorite brand recently has been Pacific Stone. So I'll plug them. Not a sponsor, but Packstone, feel free to sponsor me.
And to be clear, we do not have a guest for today. So we're just going to go until we get bored of your questions, and then we're going to end it. We will be doing a Twitter space on in approximately, hour and a half, where we're going to be going through the significant issues that are coming up with the impending supposed Ethereum shift to proof of stake. So stick around for that. Let's keep going.
So unfortunately, a police report has been filed and both Tom Brady and Matt Damon are missing. No, I'm just fucking with you guys, but their crypto.com advertisements are nowhere to be found on any publications or any sort of media outlet. Honestly, and I'm going to take this a completely different direction that P is going to roll his eyes at, but does this mean I get Staples Center back now? Like seriously, like do we think crypto.com is out of money, or do we think like it's gotten so much bad press that we're like, yo, we got to pull this?
I don't know.
Yeah,
I think the deal was on the long term. I don't know if they front run the contract. I haven't a chance to look at it. Q's looking it up. He sees something spicy right now.
No, I like this question from Ultra Carbon.
Well, I think I think I find this extremely hilarious. That the ads that Matt Damon and all these other stars were in, those are like peak bull market style ads, right? The Super Bowl was just completely chock full of crypto ads. And again, when we say crypto, there's Bitcoin, which is sound money, and decentralized, censorship resistant, and then there's everything else pretty much. And almost all of their tokens are essentially ways for people who who want more Bitcoin to line their pockets with Bitcoin. There's a whole sordid history of people there was the ICO boom, where people were basically, creating securities and it was all bullshit. Many would argue that the NFT boom that happened this cycle is part of that as well. But as I was saying earlier, one of the interesting things, so it doesn't surprise me at all that those ads are just gone because they were fucking ridiculous, right? It was Matt Damon. Like, what was the tagline? It was like, seize the day, fortune favors the bold. And it was all these like random things that had nothing to do with fucking anything. It was just like big words and flashy pictures and blah, 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 and get people to buy crypto, right? Because these exchanges, they make money when you go and you buy whatever the fuck. They don't really care what you're buying as long as you're doing it on their platform. So yeah, those things always swell and become tumescent and engorged during the bull markets, and then they die back. The interesting thing here, as I was saying earlier, is that we are still seeing some of this style. We're seeing businesses that are still very interested in associating themselves with Bitcoin and with blockchains, even though we are in a bear market. And that actually is very bullish to me overall, because it shows that Bitcoin is becoming more and more undeniable, even in the most traditional, financial system. So 6 of one, half a dozen of the other.
I wanna ask, and I assume P knows what this is. And before I go down this path, I want to fully emphasize a point. I do not support regulation, especially in Bitcoin. I do not think that any regulation helps a purely free market. So with that in mind, do you guys know what bucket shops are, or bucket shops used to be? P, I'm sure you frequented them plenty of times in the 1900s and late 1800s.
When I had an old timey voice, like 2 things that'll never happen: man on the moon and a bucket shop that makes money. Are you like talking like a boiler room style thing?
Like it's like, instead of E-Trade, like in 1899, you didn't have fucking E-Trade, and most people didn't actually have a stockbroker because you didn't have enough money. You could go to the bucket shop though and trade stocks and commodities at the bucket shop instead.
Interesting. Yeah.
But they, quite frankly, were more or less just gambling halls. Like you weren't going in there because like, I believe in the future of copper. Give me 100 shares of copper because it's going to go up. Like, no, you just, I think copper's going to go up. Like, let's ride this wave. And the truth is, the bucket shops all got outlawed because what was found out later is all these bucket shop owners and the businesses, they were lying about the price you were getting. They were taking fat commissions. They were essentially lining their pockets while just taking your bets, and it just went to them directly. So like they had very thin margin lines. They can manipulate the stock because there's no internet to confirm what the stock ticker is. So they're getting phone calls from New York.
They're probably taking a huge spread on the bid ask as well.
Yes.
And stuff like that.
Yeah. Like you would get a 0.5 point margin, but what they would literally do is if they had too many traders all thinking copper is going to go up with a 0.5 point margin, their phone call to New York was push the price of copper down so we can margin call everyone, wipe everyone out, and then you can do whatever you need to do with the price of copper. So that's genuinely how bucket shops were operating. I bring this up because I want to compare the likes of these crypto casinos, like a Coinbase, like a crypto.com, to these old school bucket shops, where ultimately, like, they don't give a fuck what you're buying or selling. If 1 or 2 people are making money, that's great. But as a whole, most people who are going to bucket shops to trade were losing money, and the only people getting rich were the bucket shop owners. So if you're a big time gambler, you like to go around these shithole casino or shitcoin casinos, I caution you because you are more a target than they are. But I don't know, maybe my analogy doesn't make sense. Maybe I'm reaching a little bit. I don't know. I do want to answer now the question of what's the fastest you've all driven.
I got a couple in here, but we can answer that first. I've driven probably like 115, 120.
Nice. Same.
Yeah, I think I took a race, or like a racing defensive driving course, and I think I got up to like 130. But
fuck you.
Nice.
That's awesome. Better than both of you. Then I almost crashed the car. So,
so someone else was with the price. I'll pull it up. With power prices going down, do we think Bitcoin mining will skyrocket, and will they continue to hold and not sell? Well, there's a lot of factors to this. Obviously, with the Bitcoin price going down, they still have electrical bills to pay. It also depends on what is their energy mix. If they're using renewables or some other thing, depends on their contract. I think really Bitcoin mining lags behind the Bitcoin price. It goes higher highs when Bitcoin's price goes up, and it goes lower lows when the Bitcoin goes down, as seen with the mining stocks. I guess anything else you guys want to comment there before we move on to the next one?
I think there's also the debt level of miners is very like that will help you understand what's about to happen to each individual miner. I think better than the cost of energy or the price of Bitcoin right now, more than anything. Because if someone is over levered, like Core Scientific, they had to liquidate a lot of Bitcoin to cover their leverage. Marathon had some amount of leverage, not over leverage, but they had some. So they had to liquidate some of their Bitcoin. You know who didn't have any leverage, who hasn't liquidated any Bitcoin, who I actually think in this next bull run, like that is my sort of where I'm going to start putting some more chips in. Not financial advice. I'm just telling you what I am seeing. Hut 8 had no fucking leverage. They did not sell any Bitcoin and they continue to hold. That is how I'm looking at these publicly traded miners and how I'm discerning it. Energy prices will continue to fluctuate up and down. The price of Bitcoin in the short term will continue to fluctuate up and down. These things are microcosms to the larger picture, which is, do you have bills due and can you pay your bills?
Yeah, I mean, you touched on an interesting aspect here, which is the strategies that different mining entities operate under is incredibly varied. It's really, really interesting. Q, you know a lot more about it than I do, but you know the amount of debt that these different companies take on, the types of loans. Some people are doing, you know, ASIC collateralized loans. There's all these financial instruments that different miners have created and are, you know, pursue in bull markets, right? Because the whole idea is like, how can you time the market effectively, and then can you acquire enough capital in a way that is, you know, low enough risk so that you can, you know, compete in terms of hash power, overall hash power with your competitors. And then can you basically sort of pack it in effectively as we enter a bear market? And do you have enough capital to then like start buying more and more machines as the price of those machines drop? So there's tons of different strategies that people employ. And I agree with everything you said.
Yeah, I got another good question on here. This is kind of hypothetical. What would the price be if all Bitcoin gets off exchanges? Obviously, this is very, very hypothetical. Obviously, if you pull all the Bitcoin off exchanges, the price technically bids theoretically to infinity. But with that being said, as the price is bidding up, people will come in to sell their coins.
Wait,
so like the theoretical thing.
Chris, let's calculate. Like we could actually calculate this.
No. Wait, hold on. Anybody who tries to tell you what the price of Bitcoin is going to be at any given time.
No. I want to explain why. Like you can calculate and prove infinity is the answer. Like that's the point I'm trying to say. Because
but old coins come out and they they meet the bid ask spread.
Supply and demand. If there is now, you have introduced zero demand in theory. Because if there's no Bitcoin on exchanges, that means there isn't transactions happening in that medium, and the only medium a transaction could theoretically be happening is peer-to-peer.
Yeah, exactly, as Bitcoin was originally intended. So the point is like, if all Bitcoin got taken off of exchanges, that would mean by necessity that people were it would mean that people were transacting. They would start transacting peer-to-peer. So like if exchanges like packed up shop and we're done here, there's an argument to be made, and I think there's no way to sort of quantify this explicitly, but if there was some disastrous thing around exchanges specifically, then that would affect the sort of social and cultural, or that could affect the social and cultural view of Bitcoin, and that would affect the price. So there's all these different factors that would go into play there. But
also, it would also catch a lot of, maybe not a lot. It would catch some exchanges, I expect, swimming naked, meaning that they have more 100%. Outstanding claims for Bitcoin that they can't offer because it all got withdrawn. So I'm assuming a lot of them would have to file for bankruptcy, or then they're buying into a market with technically no sell. So then they're like further pushing the price up. But this is all hypotheticals. The price would go up in turn as people are withdrawing. If everyone were to start withdrawing at once
on those exchanges, yeah. I mean,
yeah, exactly.
You basically have the like spot peer-to-peer price, and then you'd have the exchange price. I mean, I'm blanking on the name. What is the no KYC exchange? The most
BISC.
popular one? Yeah, BISC, right? So the price of Bitcoin on BISC is higher
There's a premium on it.
There's a premium on it, right? Because the no KYC premium that you're paying. So it's what I'm trying to convey is that different premiums go into effect. And if everybody took their money off of exchanges, then in theory, the exchange premium would skyrocket, because if you could only buy Bitcoin on an exchange for some random reason, then you'd be having to pay through the moon. But then that would be different than the different markets that exist peer-to-peer on places like BISC, et cetera, et cetera. Short version, impossible to answer, but up.
This is an interesting one. Good evening, Paul, from the UK. Please check Executive Order 14067, Section 4, signed off by Joe Biden on March 9th, 2022. This is something we should all be talking about. This is social credit system. I am not going to lie. I know I can speak for myself, P and Q. We were in the throes of setting up for Bitcoin 2022, so a little bit of the news was not watered down, but we were very, very busy prepping for Bitcoin 2022. This is something that I would need to look into. PEQ, I don't know if you know this executive order or this section. I'm assuming you guys don't, because we were super busy at the time, but I will definitely.
I have it pulled up. Policy and actions related to the United States central bank digital currencies. The policy of administration on a U.S. CBDC is as follows. Sovereign money is at the core of a well-functioning financial system, macroeconomic stabilization policies, and economic growth. Highest urgency on research and development of CBDC. Wait, no, timeout. We've talked this story. This was the research executive order that Biden had put forward.
Oh, yes,
we fully have talked about this on this show before.
I didn't know the executive
order with McShane when McShane was co-hosting back then. This is the executive order that essentially started to put the groundwork forward for the U.S. government to essentially say, we are going to explore, put money and research and time into better understanding this space. I'm spacing on, I believe it was Paul who highlighted this. Is there a specific paragraph that you are highlighting or uncomfortable or concerned with? I mean, we understand that they are going down the path of a CBDC, and that in itself is stupid and moronic for a multitude of reasons. But if you actually zoom out and kind of understand why would a country that has created a currency that is now the global reserve currency, that is at risk of losing global reserve currency status, not want to create another form of currency that they have this insane control over? I know you mentioned social credit score. I mean, look, things like getting the COVID vaccine, oh shit, YouTube's going to take our channel down. Or like just little things here or there, like, putting on or whatever the stupid things that they're going to come out and tell you to do, like the carbon credits we talked about, or shaming you for buying meat. These are little things that are happening, absolutely. And you are right to be concerned that if there is a point where we have so much government oversight on how we're spending our money, like we joked about this, I'll date stamp it. P and I had an awesome opportunity last night to sit down with Odell, and we had a very long rip. You guys will see it probably next week. We talked about how many people our generation realistically have cash, and Odell and I were joking that no, only our generation, only the stoners do, because we had to have cash because there were transactions that the government wouldn't allow me to do, and I didn't want the government knowing that I was making those transactions either. There will always be a place for Bitcoin when there's too much oversight, and I think, come on in, gentlemen. Yeah, that's my mini rant on this. I don't know if through this conversation this has jogged your memory, Chris or P. You're familiar with it.
Yeah, no, I think that's good. Should we let Q bring him in? I think it's Dennis and Tommy.
Oh, we got everyone in here.
Oh, no shit.
P's at home right now. We've even got. Wait for it. I was just talking about you, sir.
Do you know that your massive wrench is still downstairs?
Yeah, that's mine. I left it there.
Camera's right there.
Nobody else can hear.
Good, sweet.
Stay humble and stack sats.
Come to this
Matt Odell, my friends.
Closing show tomorrow.
Tommy.
Tell it in the camera.
Our very own artist in residence.
Dennis, tell it in the camera.
Speaking of the mic.
Yeah, no, Cyberpunk Now show is downstairs. We're doing a closing event. This is really great. A video here.
We're about
Good
to
job, guys.
take these flyers,
Jesus Christ.
staple them all over Nashville.
For those of you that are based in Nashville at Bitcoin Park.
I can't hear you, but my goodness, your mustache looks glorious.
Thank you, kind sir. I
Yeah.
grew it in about 2 hours. So, Dennis, since Q has blessed you with the headphones and the microphone,
Yeah,
this is
great.
unprecedented. This has never happened before.
I'm sure it hasn't.
You are. What is your official title at Bitcoin Magazine? Because
That's
you're a
a good
full-time
question.
baller in my eyes.
Yeah, thank you. I like to say it is art gallery director. I don't really know if that's true. I think it was art gallery coordinator. And then we had a lot of debate as to what should be on a card that convinced somebody to answer my emails. And I think that's what we settled on. But don't ask HR that.
You're doing yourself a huge disservice. Dennis and Tommy planned and implemented the entire art gallery and auction and everything related to it at Bitcoin 2022. They did an absolutely incredible job, and he has incredible taste. Also, even more interesting to me personally is you are an extreme aficionado of conspiracy theories. You and I have gone back and forth many times.
God damn it.
About fucking flat Earth bullshit, the ice wall, hollow Earth, lizard people, chemtrails, the little people that live inside of our blood vessels and control everything that we do. These are all things that are accepted facts in the modern age. I'd like to ask you, what is your current most interesting conspiracy theory? Which one has gone into your brain and grabbed your eyeballs and then pulled them out, but not in a way that would kill you?
So yesterday I drove from Dallas to Nashville, and on my way I listened to several podcasts, and even had this like inner monologue with myself where I was like, oh, I'm not really interested in going public talking about this sort of thing. Like, I'm not really like so let's do it. Let's have a public conversation about that. I listened to a guy named Johann Fritz who claims to have experienced a multiple experiences related to like military in space. And it's pretty out there. And he actually lays out a scenario where what he calls 20 and backs, where a 20-year service is done, and then they are regressed back to the point in which time is regressed to the point back where they originally were. And yeah, it's pretty out there.
I just changed your title to more accurately reflect who you are and what you're about. I'm not gonna lie to you. I have no idea. Like, I didn't understand what you were saying. Like,
that's okay.
Solidify it into like 2 to 3 sentences for me.
What this guy was saying?
Yeah. What's the claim? Where's the conspiracy?
Oh yeah. Okay. Well, the claim is just that military programs go into outer space, and that a number of our technologies are far more advanced than we're allowed to believe on the surface world. And that he like provides recollection of doing these military trips and such. It's pretty out there.
Good stuff. I mean, I was hoping for something that was a little bit more like far-fetched and insane.
Sorry,
but I forgive you.
I'll work on it.
No, you're amazing, man. Thank you for joining us briefly to regale us.
Yeah, my pleasure. I'm going to pass this. But yeah, no, just quick shilling. Bitcoin Magazine is going to have an art gallery exhibition at the Bitcoin Amsterdam. It's shaping up. We got quite a few great artists contributing. We're also continuing to curate pop-up exhibitions at both Bitcoin Park and soon to be at Bitcoin Commons during BitBlock Boom. And our artist limited edition program has been rolling out, and it's just steamrolling. Tommy was our first one, and it's just been extraordinary. Get it while you can, because that stuff is selling.
Dennis, also before you go real quick, also mention that we are expanding the art section in the Bitcoin Magazine store. You can use code BM Live to get 10% off anything in the Bitcoin Magazine store, including the art. What are some good things in there right now, or what can people expect in the future?
Yeah, I would say the big thing is the limited edition prints. Tommy's print War Bonds is in the store online right now. really great reception in the first couple weeks that it's been out. Q is coughing. There's a number. There's a Pepe hat that is corduroy, and maybe over the past few weeks when it was 100 degrees out and you were saying to yourself, "Hey, I really need a corduroy hat." You can get that there. It's great. You should get one. Get a print. Get a corduroy hat.
Solid.
Thank you. Yeah, thanks.
Solid
Dennis.
Bitcoin advice. Well, thank you for your time, my friend.
Yeah,
You
good to
can
see
give
you.
it back to Q now.
Yeah, I'm gonna stop.
All right, I'll come back. What's up? He looks like he's about to kill me. I told them they could just stay in the background. I told people just like come hang out over there on the balcony because we're at a park. I figured.
Perfect. Let's do it. Let's do it. What else we got? I don't even think we went through all of our news stories today.
We haven't even, but I'm loving these questions from
They're good.
the comment. Like keep them rolling.
I had two that I wanted to hit before we get to the final two stories, I guess, if you guys don't mind.
Yeah, no, keep whatever
Let's do it.
questions you've been holding back, bring them out.
So this is an interesting one. This is kind of another hypothetical. Will blacklisting create more scarcity and or create a black market for Bitcoin? I said that it would create a black market for Bitcoin. It also does create a scarcity of green coins or not blacklisted coins versus blacklisted coins. I don't know if that'll really matter. P, I don't know if you want to touch on this. Like the incentives are so strong though, that like, I know when Marathon, they tried to implement OFAC compliant blocks. They tested this out, I believe back in end of last year or early this year. And then there was a block that came in from Iran and they literally put an op return saying like something in, I forget what it was, some in Iranian, but it was basically saying like, oh, I'm glad that the Iranians included the block or included this transaction in the block. So the incentives are strong enough that normally it can stop things like this. But PQ, anything of your thoughts?
I mean, I think the thing you just referenced, Marathon famously tried to do this and then it backfired spectacularly and then they basically had to roll it all back. I think that there are aspects of this that we need to track on. I think there is an idea that governments might try to co-opt Bitcoin by incentivizing mining entities outside of like the Bitcoin blockchain, basically paying them, to enforce things like OFAC compliant lists. I think that realistically, because Bitcoin is so decentralized, or rather because Bitcoin is decentralized and it still needs to be even more decentralized, I think it is very difficult at this point for governments to coordinate in this way and try to have this kind of effect. So I don't actually think that it is practical as of yet. And I think that Stratum v2, which is something that people are working on, which will further decentralize the basically the template selection for mining pools. So individual miners who are participating in larger pools will be able to decide which transactions they are, contributing to and which they're not. That's a vast oversimplification, but in short, I don't think that it's something that will happen as long as people still continue to fight against that with things like Stratum v2. And I'm optimistic, I guess.
Yeah.
I do think there's also the not just the potential blacklisting the way we've seen with ETH, but just KYC, something that we talk about from time to time on this show. But there's always that conversation that many people agree and disagree on of, will KYC coins or non-KYC coins be more valuable if there was more government regulation or intervention here? That would suck, but also like selfishly, you just decrease supply. That's all you're doing.
Yeah. There's
All right, let's keep going.
Another good question here. So P, you might be I kind of responded to this, but this might be a good one for you to respond to. For a pleb, going from one hardware wallet to software on Sparrow to get CoinJoin going, then going to another hardware wallet, or I guess a new address, does that protect privacy still? Cool stuff. Learning a lot. Thanks, Joseph, for commenting.
So going from one hardware wallet.
I think he means transferring from a hardware wallet to Sparrow, coin joining, and then going back to another hardware wallet. Does that protect privacy still? I said it improves your privacy if you're using CoinJoin correctly, but you have to be careful with dust. Dust is a small fraction of a Bitcoin from the previous UTXO that gets, so let's just say the whole transaction is 1 Bitcoin that you're sending in, and then there's a small fee that gets sent back to that address, like let's just say 2,000 sats or whatever it may be. That is still linked to your identity if you bought it from a KYC exchange or person or wherever. So that can still get you in trouble if you mix, like you've coin joined and you mix and you now have a new address. If you mix that dust or that small amount of Bitcoin with another UTXO, then someone can link by looking back on Bitcoin because it's open source. They run a node, they can see that they assume that you own both of those UTXOs. P, is there anything that you want to add to that?
I mean, I think if I'm understanding the question correctly, there are a lot of things that you can do if you are not careful to de-anonymize your UTXOs after using a CoinJoin implementation. So I think it's important that you understand how Sparrow, which is a desktop, coordinator, works and how Samurai Whirlpool works. And they have a lot of really, really good educational materials about like what to do and what not to do. I do know that Samurai Wallet, which is a separate, wallet, does have a lot of tools that, it has like a dust detection system, and most wallets will actually detect dust. But as Chris said, you do have to be careful of that. So in theory, if you are following all the best practices, yes, that would, what you just described would increase your privacy. But again, you have to be careful not to accidentally de-anonymize it by like combining all of them into a single UTXO again, things like that. So I'd say do your research. There's some really great tutorials out there. I think BTC Sessions has some great ones. I'd check them out.
Definitely. I got 2 more ones that just came in as well. Alphabet/Google invests in Voltage. Thoughts, please. So Voltage.cloud is a company that helps sell liquidity to Lightning Network. This is news to me. I would need to look into it. I think Google was investing, I think we talked about this recently, like 1.5 billion since last November through June of this year. So I'm not surprised they invested in it. I know Voltage just raised the seed round anyway. I like the guys at Voltage, or, I know we talked to Nate the other day. I like a lot of what they're doing. Obviously, I think people are worried about large tech companies trying to take over Bitcoin companies or trying to not unalign their incentives with the Bitcoin ethos. But I guess my initial thoughts is I know that they raised money and, I like a lot of the guys there. I hope they stick to the Bitcoin ethos and they don't get co-opted by, other entities. What are your guys' thoughts? Anything?
Nope. I agree.
One more quick. Do you guys run a full Bitcoin node? I'm stuck with Raspberry Blitz, even tried Umble. Any place to ask community to help building Bitcoin nodes? I run a node. Yep. Well, go ahead.
No, I was just, I couldn't help myself. I got all excited and I was like, PlebNet chill, let's do it. I was just going to say, if you're interested in running a Lightning node, PlebNet, which is sort of just a community group that a bunch of us got together and created a while back, is a fantastic place to start. If you go to plebnet.org, that'll take you to the Telegram chat. There's thousands of people in there. They're all running Bitcoin nodes, specifically Bitcoin nodes, Lightning nodes, that is. But there's a fantastic PlebNet wiki. I believe it is just plebnet.wiki. But check that out for sure. Chris, go ahead and say what you were going to say before I so rudely interrupted you.
Yeah, no worries. I ran an Umbrel node. I think it's a great way I know a lot of people started running nodes because of Umbrel. I had a lot of issues personally, so I actually wiped my setup. Obviously, withdrew the Bitcoin that I had on there. The Lightning channels I closed. I converted it to a My node, and I'm loving it. So I run a My node personally, and I think it's great. Q, or Dennis, as we have you namesaked right now on there.
I'm still Dennis. Okay. I mean, to be honest, you could shame me on this one and pull up Sovereign Pickles comment. I'm an asshole, but soon.
All right. I guess, do you want to hit the last 2 stories? Actually, I just see another question that just came in. Do you want to hit this one? One last question, then we'll wrap up stories.
Ooh, wait, no, let's do Roxanne Yee, or I can't pronounce their first name, but hey, excellent questions all day. This was a conversation, P, you and I actually had with Rockstar last week. Do we want to maybe talk about that response?
if I buy from Coinbase, transfer to Ledger using Wasabi, and then transfer from Ledger to another hardware also using Wasabi, is this too much? So I mean, these types of like super specific questions are very hard to answer without knowing your specific situation. But I mean, I think, yeah, honestly, like,
are you not already KYC though by using Coinbase?
yes, you are.
You are, but yeah, you
And
need
so-
to go ahead.
Yeah.
Go ahead, Pete.
So really, what they're asking is like, if you transfer from Coinbase, so the specific hardware manufacturer doesn't actually matter, right? Whether you're using a Ledger or a cold card or a Bitbox 02 Bitcoin only edition, those are purpose-built computers that allow you to safely store your private key and also sign transactions, right? So whatever wallet you use, whichever hardware device you use, you're still going to get a 12 or 24 word seed phrase. And that seed phrase is the thing that is then used to derive your private key, which controls all the Bitcoin that you have associated with your addresses, right? So like you can, and one of the sort of frustrating things is that different hardware wallets use what are called different derivation paths. So the way that, like when you request a new address from your wallet, it's giving you new addresses based on what are called hierarchically determined addresses. And basically, it's like it is a set of addresses that the world cannot tell are all controlled by your specific private key, but you are able to access, and kind of an infinite number of these addresses are generated. And that's important for protecting privacy. So the specific hardware device you're using is less important than like what you are trying to achieve. So if you're trying to create more sort of like breaks between what you're doing by transferring like from Coinbase to a specific, address, which you happen to be, controlling with a Ledger, and then to a Wasabi, that's actually not, I mean, that is going to be one additional hop. It's not going to give you like a ton of additional privacy, because the reality is these chain analysis tools are very good at being like, well, there was one hop, and so we know that that's actually going. So like chain analysis can tell, and like Coinbase can certainly tell that like you sent your if you go like directly from Coinbase to something, to a CoinJoin tool, they can tell. And adding one additional hop, I mean, that's actually not a bad strategy, but going from one type of hardware device to a different one is not going to change things particularly much. It's more important that you have like an effective strategy overall. And I wouldn't necessarily worry about like adding additional hardware devices just to kind of like complicate it. But again, I think it's really important that you go and watch. I know I recommend BTC Sessions a lot, but he has a lot of really, really phenomenal videos that go through each of these steps and really effectively like pull all of them apart. I know Bitcoin Magazine has some as well, but I would really go watch some of the videos on CoinJoining, go read through. I'd recommend Samurai. Their documentation is really effective at this, and make sure you understand the implications of each of the different steps.
Also, if you want more of like the reading version, if you're not as good with videos, or you like more of the written content, I know Bitcoiner.guides. It's something that Bitcoin Q&A created. He is one of the developers over at Foundation Devices.
Absolutely.
So he's got an awesome privacy guide talking about no KYC Bitcoin, talking about coin joining, talking about privacy and Bitcoin and stuff. Really, really great guide. And I believe he was on Matt Odell's podcast. It was one in the 40s. I think it was episode 47. That's a great one that they go soup to nuts privacy Bitcoin usage, which is really great on Citadel Dispatch. One more thing, and then I'll hit the last two news stories. What?
Real quick, I just want to chime in, because there's another side to this too, that if KYC is genuinely your biggest priority, I will just pass along the advice that Rockstar gave to me last week in advance of his funeral and then resurrection. He point blank was like, you might as well just sell all of your KYC Bitcoin, like take the loss on that, and then go rebuild your stack, like using non-KYC options like peer-to-peer or using a Bitcoin ATM. Obviously, like you may not have the appetite, depends on how large your stack is, but just something to consider if that is something that you are prioritizing.
That's not bad advice, but I think that is actually impractical for most people.
Totally.
And so I think I do want to like set the sort of like spectrum. Like if you are very, very focused on having non-KYC Bitcoin, which I personally think is a great idea, then yes, that is something that people can explore, but that's an extreme step to take. And I want to be very careful, as we've said before, when we're recommending that people like, not your keys, not your coin. It's
None of
really
this
important.
financial advice.
None of it's financial advice, blah, blah, blah. But the most important thing is that you don't take anything that we or anyone else says as gospel and go do it before you understand exactly how it works. Like, you need to test these things out, like go experience them, because you will fuck it up, right? I certainly did. I like went through when I was first, when I got years and years ago, when I got my first hardware wallet, I like set up the wallet, I wiped it, I made some small test transactions, I sent them back to the exchange, I sent it back, like I wiped the wallet, restored the wallet, like I did all this shit so that I was like, okay, I feel like I really understand how all the things could break. And that's really important. So do not take any of these pieces of advice as gospel and just go do it because you feel a sense of urgency. Be careful and do it right. And again, just go through the guides, Bitcoiner Guide, BTC Sessions, Bitcoin Magazine. There's so many resources out there.
A less extreme and option that ultimately does get you, in my opinion, the same result is you can have more than one wallet, and one wallet can be for your KYC, DCA stuff, and then the other wallet could be for your non-KYC purchases.
Yeah, I will say, I think the most practical thing for most people is to learn about how to buy non-KYC Bitcoin if that's something that interests you, and then just start doing that. But again, as Q just said, like you never want to mix. You need to be very careful not to mix your non-KYC Bitcoin and your KYC Bitcoin. You never want to send them to the same address or use them for the same payment, because that will then you tie those things together, and then like instantly, like, because this is a blockchain, because this exists in perpetuity, right? Once you accidentally tie, or if you accidentally tie your identity or your non-KYC Bitcoin to your KYC Bitcoin, that's it. Like those things are linked, and it's like, if you're not careful, like, you're done there. So, and your privacy is gone. So I don't want to scare anybody, but just, go through the process, understand how it works, test it out with small amounts, get your shit together. Let's keep going. All right. I think we should do.
Yeah, I have one last thing. So when some hack was saying, well, I always say to no corners, you don't have to run a node, which is true. It's something you might want to consider later on, but you don't have to do it. And they have enough to consider at first. I know Odell always brings up, if you don't run your own node, you're using someone else's. Obviously, you're doxing your privacy. So this kind of ties in with the whole privacy thing. If you're not running your own node, you are basically essentially either doing it to the hardware manufacturer, whether it's Ledger, because I know you can link it to your own device, but it defaults to doing its own. Or if you're looking at it, particularly an exchange, you're using their own node as well to verify your balance. All right, we'll hit the last two stories, and I think we'll give this a wrap here.
Let's do it.
So Bitcoin miner Stronghold gives back 26,200 rigs to reduce debt. Bitcoin miner Stronghold Digital Mining Incorporated said it reached agreements with lender New York Digital Investment Group and Whitehawk Capital to eliminate over half of its debt and add liquidity to the company's balance sheet. This company will also restructure its convertible debt note. The importance of this is obviously Bitcoin's price has gone down. I'm assuming they are getting not margin called, but they have debt that's coming up due soon. So unfortunately, they're needing to sell miners. It didn't allude to say that they sold any Bitcoin. So I figured they're opting to sell Bitcoin miners instead of selling the Bitcoin that they hold themselves. This kind of seems like they were planning to implement these, and they were either having trouble issuing them in rack space or even just having a setup to implement them. So obviously they're selling things that they can in order to stay afloat and meet their debt requirements. Moving on, unless there's anything else you guys to add there. Moving on, EU lawmakers seek to cap banks' Bitcoin holdings. What this basically means is the EU ruled not too long ago that banks are allowed to hold Bitcoin on their balance sheets. But it comes with a caveat now. The EU lawmakers are looking to make it that Bitcoin banks, if they hold Bitcoin, let's just use the US for example. I'm not sure with the EU rules, but most banks are fractionally reserved at 60 to 94%, meaning that they hold 6% of the reserves on cash or cash equivalents on their bank, on their balance sheet. That means the other 94% are fractionally reserved through the loans, whether it's cars, homes, you name it, just various business loans, whatever it may be. EU lawmakers are looking to increase that. So if you hold Bitcoin on your balance sheet, you need to hold more cash or cash equivalents on your balance sheet for, God forbid, the fluctuations of Bitcoin's price. They're doing it as kind of a safety measure to prevent banks from going bankrupt or having too much on their balance sheet. They're doing it as a precautionary thing, but it is hindering, now as a bank, you have to be like, if we hold Bitcoin, we have to keep more of our capital reserves instead of loaning out more Bitcoin. I can kind of I'm not saying this is a good thing. I'm like I said, I'm not advocating for more policy, but they're trying to prevent another disaster like the 2008 financial crisis from happening. And also, I think they don't like Bitcoin, so they're trying to make it more difficult for banks to hold it. So it's kind of two caveat there. P and Q, anything else you guys want to add there before we wrap up?
No, I think you nailed it.
All right. You guys want to do the wrap, Q?
Let's do it. My friends, before Q goes, I just want to say thank you all for working with us today. This was super fun. I'm glad we got to answer a bunch of questions. Yeah, let's fucking go. Q, what's happening next?
We'll see everyone in like 45 minutes as well.
Yeah.
I mean, at this point, you guys should just wrap.
No, you're missing your favorite part where you get to say, hey, if you do not already have a ticket to Bitcoin Amsterdam, you should absolutely buy one because it's going to be fucking awesome. It's going to be in Amsterdam. People smoke weed there and it's going to be cool. So use code BMLive to buy your tickets if you have not already and you want to go to Amsterdam. Also, censorship resistant issue of the magazine is out and it's fucking amazing. Buy a copy.
Q's distracting. I'm going to kick him off. All right. So we are going to be on Bitcoin on Spaces in about 45 minutes at 3 p.m. Eastern. We will be there with Dylan LeClaire and Sam Rule and a couple other guests talking about proof of stake versus proof of work. Guys, thanks so much for listening. We will see you tomorrow. Q is in the backstage all mad and ranting, but have a good one, everyone. See you tomorrow. Peace out.